The easiest way to save big on taxes for W-2 employees that actually works. If you're ready to keep more of your hard-earned paycheck and slash your tax bill, let's dive in. Welcome back to Tax Premier. I'm Jonathan Wood, and today we're uncovering 5 tax loopholes for savvy W-2 employees. Strategies that most people think are reserved for the rich, but are actually available to you too. Many people believe tax loopholes are only for self-employed or high net worth individuals. But if you're a W-2 employee, you might be missing out on opportunities that could save you hundreds or even thousands of dollars each year. Today, I'll break down these little-known tax benefits, show you how they work, and provide practical tips to take advantage of them. Trust me, knowing these strategies could transform your tax season, so let's get started. Before we jump into the nitty-gritty, let's have a little fun. I used to think the only tax loophole available was the magic receipt folder. You know, the one where you shove every bill and hope for the best. But here's a challenge for you. How many tax loopholes can you guess that W-2 employees might actually use? I'm talking about things like maximizing your HSA accounts or even those flexible spending accounts. I remember the first time I learned that using an HSA could lower my taxable income. It was like discovering a secret discount on every paycheck. Now, what's the wildest tax tip or loophole you've ever heard of? Drop your guesses or stories in the comment section below. Let's see who's been paying attention to the tax code. All right, let's break down the 5 tax loopholes that every savvy W-2 employee should know. Starting with loophole number 1, maximizing your health savings account. If you're enrolled in a high deductible health plan, you're eligible for an HSA. Contributions to your HSA are tax deductible. The funds grow tax-free, and withdrawals for qualified medical expenses are also tax-free. Imagine contributing the maximum allowed, say $4,300 for individuals or $8,550 for family. That amount is deducted from your total taxable income each year, and over time those funds grow without being taxed. Think of your HSA as a triple tax advantage account. It's not just for unexpected medical bills. Many people use it as supplemental retirement savings vehicle, but if you can, try to maximize your contributions every year. Loophole number 2 is using your flexible spending account wisely. Your flexible spending account lets you set aside pre-tax dollars for specific expenses such as medical or dependent care costs. This means you reduce your taxable income by the amount you contribute to it. For instance, if you allocate $2,500 a year to your healthcare FSA account, that amount is subtracted from your gross income, lowering your taxable liability. It's like getting an instant discount on your healthcare spending. Be strategic about your FSA contributions. Estimate your annual expenses carefully because most FSAs are use it or lose it accounts unless your employer offers a grace period or a rollover option. Loophole number 3 is claim the Savers Credit. Savers Credit is a tax credit available to lower to moderate income earners who contribute to a retirement account such as a 401k or IRA. Unlike deductions, this is a direct credit that reduces your tax bill dollar for dollar. Suppose you contribute $1,000 to your retirement plan and qualify for a 20% Savers Credit. That's an immediate $200 reduction on your tax liability. Even if you already saving for retirement, this credit is essentially free money that you don't want to leave on the table. Check the income limits and ensure you're eligible every year. Loophole number 4 is deduct educator expenses. If you're a teacher or an eligible educator, you can deduct up to $300 of unreimbursed classroom expenses from your taxable income. Those extra dollars you spend on classroom supplies, books, and other materials can add up. By keeping every receipt and tracking your expenses, you might end up with a sizable deduction that reduces your overall taxable liability. Teachers, consider setting aside a dedicated folder or using an app to store digital copies of your receipts throughout the school year. It might seem small, but it can make a big difference when tax season rolls around. Here's how we was able to save a client $40,000 in taxes by implementing this one strategy. We started with implementing professional bookkeeping for her business. This allowed us to track her monthly performance and uncover some opportunities to lower her tax bill. You can't save what you can't see. This is what it's like working with a tax strategist. Click the link below to schedule your free discovery call today and see how we can do the same for you. Loophole number 5 is deduct investment interest expense. If you borrow money to invest, for instance, using a margin loan, the interest you pay on that loan may be deductible, provided the funds are used to generate taxable investment income. Picture borrowing $10,000 at a 5% interest rate to invest in dividend-paying stocks. If the interest is deductible, your effective borrowing costs drop, which in turn boosts your net return. It's essential to ensure that borrowed funds are used exclusively for investment purposes. Consult with a tax professional to make sure you're meeting the IRS requirements for deductibility. These strategies may seem small on their own, but combined, they can lead to substantial tax savings, putting more money back in your pocket. Let's take a moment to highlight some of the most surprising aspects of these tax loopholes. Research shows that W-2 employees who fully utilize HSAs and FSAs can reduce their taxable income by several $1,000s each year. Imagine the compound effect over a decade. And I recently spoke with a school teacher who diligently tracks her educator expenses. By deducting every eligible purchase, she reduced her tax bill so significantly that it allowed her to reinvest those savings into her retirement plan. What's truly amazing is how these small deductions and credits add up, whether it's saver's credit or deductibility of investment interest. Each of these loopholes is designed to reward proactive financial planning. It's all about taking control of your tax situation and using the tools available to you. Now, I want to hear from you. Have you ever discovered a tax loophole that saved you money? Maybe you maximized your HSA contributions or found a clever way to use your FSA. Share your experiences or any questions you might have in the comment section below. Your story might just inspire someone else to make smarter financial decisions. Here's the ultimate game changer. Combining these tax strategies isn't just about reducing your tax bill. It's about reclaiming control over your finances. Imagine if every dollar saved on taxes is a dollar you can reinvest in your future. That's not just smart, it's transformational for your financial journey. To wrap up, here's a quick recap of our 5 tax loopholes for savvy W-2 employees. Number 1 is maximize your HSA contributions. Lower your taxable income while building a tax-free medical fund. 2 is utilize FSAs wisely. Set aside pre-tax dollars for healthcare and dependent care. 3 is claim the saver's credit. Earn direct credit from your retirement contributions. 4 is deduct educator expenses. Teachers, every little receipt counts. And number 5 is deduct investment interest expense. Turn your borrowed costs into tax savings on your investments. By leveraging these strategies, you can significantly reduce your tax burden and have extra cash to reinvest or enjoy. Remember, these are not loopholes reserved for the wealthy. They're practical tools available to every W-2 employee who is willing to take control of their finances. If you found this video helpful, please hit the like button. It really supports the channel and helps others discover these valuable tips. Don't forget to subscribe for more financial tips, tax tips, and personal finance strategies. I post new videos every week to help make sure that you maximize your income and secure your future. Also, let me know in the comment section which tax loopholes you found the most surprising or useful. And if you're ready for more, check out my next video on personal finance hacks for a richer future, where we dive even deeper into optimizing your money management. Thanks for watching, and here's to making your paycheck work